Sports card sales have hit their all-time highs month by month over the past 3 months in a row. This has just a very little bit to do with the actual sports card market and a lot more to do with wider forces in the market at large. Let's get into this. Cards that are going up in value, having all-time high sales, are cards of the GOATs, the Tom Brady's, the Michael Jordans, the Kobe Bryants. At the same time, if you look in other markets, you can also see gold is selling at an all-time high. Silver is approaching its all-time highs. And at the same time, things like rent is approaching its all-time high. The cost of a house is approaching its all-time high. All of these things are happening, and I think it has a lot less to do, like in the sports card market, has a lot less to do with the value of those cards going up and more the value of the US dollar going down. Currently, because of the things happening in the market, a lot of wealthier people are being very careful not to just keep their money sitting as cash. They're putting it into stocks, they're putting it into assets, they're putting it into gold and commodities like that and silver and things like this and various kinds of alternative assets, mostly just to hedge against inflation. If you look at something like the price of gold, it's at an all-time high right now, but at the same time, the purchasing power of that 1 ounce of gold hasn't really changed historically over time. This is really interesting. The amount of gold you would need to buy a house in like 1980, I can't remember, maybe it was 115 ounces of gold or something like that. And that was equivalent to like 70,000 or 90,000 or whatever a house cost at that time. And then in 2020, you take that exact same pile of gold and it buys you that exact same house, but it's just that price is now $350,000. It's not that gold increased in value, it's that gold kept up with inflation as inflation continued to rise over time. And I think a lot of people right now are basically buying stocks, buying commodities like gold and silver, like in order just to hedge against inflation. And I think there's a particular push to do that right now, just before the interest rates are going to drop. If that happens, everybody thinks that tomorrow, when you're seeing this video, maybe today, that the interest rates are going to drop. If that happens, the mints will start printing a bunch more money, so there'll be more money out there, but this also devalues the money. It's going to make inflation go up. This is just the way that it works. And if that happens, people don't want to be holding onto their cash because as inflation increases, each dollar they're holding in cash is decreasing in value. So people are trying to put their money into things that can hedge against that inflation. So that's why I think people are putting so much money into things like gold, which is a proven thing, and other stocks that they think are going to be a little bit more proven type of stocks with a more kind of guarantee. And I think that's why people are also putting their money into these sports cards of the GOATs, recognized players. I think there's a certain percentage of people, a large percentage of people who see sports cards as investments, but they're not going to be playing around in the ultra modern penny stocks, hoping for this shoot up or shoot down, the gamblers space. They're just looking for those blue chip stock options. They're just looking for something to hold that's going to hedge against inflation. And I think they're thinking that these GOATs are the players who are the safest. Maybe the value doesn't change that much, but if the value of the dollar goes down and that card, and that card's value can just maybe keep up with inflation, then they feel like they've made a wise decision. I think that's the same reason why people go and buy gold right now. Nobody is going to buy a bunch of gold thinking that is going to make them super wealthy. Gold has been at about the same value forever. I mean, it's been a form of currency for a few thousands of years. But in the U.S., at least, if you compare it to the economy of the most recent modern times, its value purchasing power has always stayed very close to the same. I mean, there's been some ups and downs, but generally it trends just even. So you're not buying gold to become super wealthy. You're buying gold because you are afraid the purchasing power of your dollar is going down and you want something that is going to hedge against that inflation. So you buy gold. I think a lot of people are doing that with sports cards right now. A lot of people think of it as an alternative investment class. A lot of corporations, large corporations, are throwing money into this area, so it feels a little bit safer. It does have a history. I mean, there's been sports cards around for 140 years. There's been a collector base. The spikes and stuff, like that's not a historic thing that's always there, the spikes in value, but collectors have always been there. So there's a certain base level. Just like the reason that gold is perceived as something that's going to hold its value is because it has historically over long periods of time, so there's no reason to think it won't. Silver may be similar. And sports cards are, a lot of people think of it that way. Whether they're right or wrong is not what I'm trying to say here. Whether it should be thought of as an alternative investment or not, like maybe buying a piece of art might be, or something like that you hang up a Pablo Picasso on your wall. Maybe that's the same person who's buying that 1952 Mickey Mantle. Maybe they're choosing not between this sports card and that sports card. They're choosing between buying this 1952 Mickey Mantle or buying this piece of artwork by Monet, or I don't know. It's rich people who are trying to put their money into commodities rather than have their money in cash. And the stock market also is in a situation where, you can make a lot of money in the stock market, but at the same time, it's a volatile situation, and there's so many things happening in the world and a lot less certainty. People will still put a lot of money into the stock market. Historically, it also has this trend, very clear trend of going up over time, but there's also a fear because of just the unknown situation of the market, the volatility of the decisions, current administration, how things can shift and change very suddenly. I think there's just generally not confidence about the market, so people are a little bit scared in stocks sometimes. Some people are, this is the time to take their risks and the time to make a lot of money, and other people just want to hold on to their wealth and don't want to lose it, so they're buying commodities, they're buying gold, they're buying the goats of the sports card world, and not worrying that much. They're not expecting that card to go up in value a ton. They're just hoping to hold it for a while. And then I have a feeling once the market economy gets back into a more steady place where inflation is kind of a little bit not such a big deal, they're not printing more money, like things get back to a more normal type of space, I have a feeling a lot of the people might end up selling, they might make decisions to move their money from this asset to that stock, or from this asset back to cash, if cash is a good thing. Or, I think when it's in this higher end value space, which is the things that we're really seeing in the card market are going up in value, is the cards that have a lot of value and are kind of out of the reach of the average person. Those are kind of more the wealthier people's game. And I think those are the people who are also being more careful about what they're doing with the cash in their bank accounts and stuff. If you're just a regular guy and you have 3 or 4 months of savings in your bank account, you don't want to turn it into gold. You don't want to turn it into that high-end sports card. You don't want to turn it into a piece of art. You need flexibility. You need to be able to, maybe you can put it into a high savings bank account that still allows you to take money out of it. So you're okay. You're just getting that little 3% APR, 4% APR, or whatever it might be. And that's all you're going to do, because you might need access to that cash in the event of an emergency. You have something that you need to do to fix in your house, whatever it might be. You need access to that cash. And if you only have a little bit of a savings account, you're not, thinking too much about putting that money into this or that commodity or this or that stock. I mean, maybe a little bit, but not too much. But at the higher end, at the wealthier end, you're probably looking to move your money into diversified things. I mean, you want to have some in the stock market, some that are a little risky, some that are more safe and proven, some that provide dividends, maybe, this sort of thing. You want to have some in commodities. You need gold and silver and whatever. You want to have some in commodities. You want to have, maybe you have real estate. I don't know. People are with more money, they're going to diversify that, so that, especially in times of uncertainty, so that if there is something that happens and one area of that comes down, they're protected. They have it in these multiple places. That holding on to cash, if you have millions of dollars to hold on to, holding on to cash doesn't make a whole lot of sense. Your cash, especially at a time when inflation is increasing, your cash is just losing value day by day. So why hold on to cash? So it makes a lot of sense to diversify. And I think for wealthier people, this is one of the things they're diversifying into. So whether it's, do people in the sports card hobby, which probably a lot of it is people who won't remain in the sports card hobby. They're just going to get a couple alternative assets to hold on to try to hedge against inflation. And that's all they're really engaging in. I don't think it actually affects the sports card market beyond that too much. A lot of people are talking about, okay, what's the next thing? Okay, these things are happening now, and they're comparing it to like the COVID bubble, when you could see certain things would take off and then certain things would trail them and take off right after them. I think this is a completely different thing. This has nothing to do, this is not the hype train. This is not people trying to game the system. This is not people trying to make a quick buck. I mean, if you were trying to make a quick buck, you wouldn't want to buy like a PSA 10 Joe Montana rookie for an all-time high. That's not a quick buck making scenario. You're buying something that you're going to hold on to as an alternative asset, and that that you're hoping it hedges against inflation. You're not buying it to try to sell it to the next guy and flip it for a little bit of a profit. So I don't think there's cards that are like following up in this. I think this is just wealthier people finding cards that they want to hold on to. And I think sometimes that's why also, normally in the sports card market, when we think about the value of a PSA 10, for example, the pop count comes into it a lot. I think it's a little bit less important in this scenario because people just want that particular card to hedge against inflation. I keep saying that, but I really feel like that's the case. The Ken Griffey Jr. 1989 Upper Deck rookie card, PSA 10, has been hitting all-time highs, and it has a huge pop count. I think on Sports Card Nonsense, I heard them talking about this one. It had 4,300 pop count in PSA 10, something really high. It's a overprinted card. It's an awesome card. I bought it. A raw version I think is beautiful. I bought it for $50 just a month ago, just because I was always liked that card as a kid. So I bought it. I'll probably eventually send it off to grading. It looks nice. I mean, I don't expect a PSA 10 or whatever, but it looks very nice. But anyway, that particular card, it's been going up in value, and it's selling several times every week, this PSA 10, and at all-time highs. But I think it's just because this is a card that is also very liquid. When somebody wants to buy an alternative asset and they want to be able to hedge against inflation, they also want to be able to offload it easily. These GOATs are the kinds of cards that sell regularly. They're the kinds of cards where there's always going to be an audience where you can get rid of it regularly. That's the same reason why if somebody's buying gold bullion, there's different coins, like 1 ounce coins that currently you can buy for $3,600, that some of them will sell really quickly. It's just they're oftentimes the ones that are the most common, but it's they have a certain market liquidity that you can sell anywhere. You could go to your local coin shop and sell that particular gold coin. You could have a different 1 ounce gold coin that has the same value, has the same amount of gold content, but it's a little bit harder to sell. You go there, maybe they offer a little bit less because there's not as many buyers of it. The market demands are just slightly different, so it's a little bit less valuable. So people want to get the thing that everybody realizes that is the thing. The Ken Griffey Jr. rookie card is one of the most iconic sports cards of all time. And so, it's a very well recognized thing. So if that person gets into that card, even if the pop count is really high, they know they can eventually sell it off and get money back and do something else with their money if they find another place for that money to go. So this isn't a rare card, but it doesn't need to be. It needs to be liquid. It needs to have high demand and be liquid, and that's a perfect card for that. And the cards of the GOATs tend to be that. More than the numbered rare card of a semi-GOAT, or, of a second tier type of player, which I don't think those cards will increase in value, because I think those cards are more at the play in the market demands of just the sports card market itself, of people who are buying and selling and aware of the sports card market and care about that numbered out of 5 number that's on the side there. But I don't think that's not the proven thing. That's not the proven thing. The serial numbered cards are relatively new. They don't have a proven history of mattering to people. But the Mickey Mantle rookie does. The Ken Griffey Jr. rookie card does. The GOATs of the rookies do. So those cards are going to be the ones that people are going to want to grab and have as an alternative asset. And I think that's what's been happening. I mean, I'm not an economist, so there's very likely all sorts of other market elements that I'm missing about this, but I do think that this overall thesis of wider market forces affecting the sports card market seems obvious to me, and I don't think, it's not like all sports card people should, get a PhD in economics, but I do feel like as I'm learning more in my personal life, I'm trying to learn more about the stock market. I'm trying to learn more about where to put some of our money, because I realized the other day that the money that's just sitting in my savings account, it gets a 0.55% interest rate. That's basically nothing. So I've been doing more and more research, put some into stock, some into gold, some into silver, some into different spaces, diversifying a little bit. Not that I'm a millionaire, but with the money that's sitting there that I don't need access to regularly, I'm trying to diversify it a little bit more. I don't really know that much about the stock market, so I've been spending over the past month or so a lot more time just trying to understand it, putting some money in that I'm into a Fidelity account that I'm kind of playing with and trying to buy and sell stocks and things to try to learn a little bit more about the market forces. And the more I'm learning about that, the more I realize that it's those sorts of things that are affecting the sports card market more than the sports card market forces, internal market forces themselves, the supply and the demand just within the sports card market. It has a lot more to do with the wider market forces. And I feel like that's something like if you're actually trying to make money with sports cards, if you're collecting sports cards, that doesn't matter. Like, so whatever you buy that sports card at now, if you're just buying it for your personal collection and you're not going crazy and making big speculative moves, like you can just, that's fine. This doesn't matter. But if you're actually, thinking about like, making a bit of money in sports cards, I don't think this movement of the GOATs really is going to have a ripple effect on down to just the common, normal, everyday cards in Ultra Modern or whatever. I think this is a unique little thing that's just a reflection of what's happening in the wider market forces. So anyway, hope you enjoyed this video. If you have any thoughts about this, please do share your thoughts. I am totally open to the idea that I'm missing things completely because, that's I don't want to hold on to, and this is just where my mind has come to understand it at the moment. I realize there's all sorts of things I don't understand. So if there's certain things, I feel like this is a nice, in discourse in America in particular, discourse oftentimes comes to an argument. Like if you disagree, there's an argument. I am more about the mind, like this is my contribution to the middle, like mixing pot of ideas and thoughts. If other people want to add some thoughts and ideas into that we can mix together and come up with a more nuanced understanding of things, I'm always good with that. So please do share your thoughts, whatever they are, in the comments below. I will see you in the next video. By the way, I don't know if you know, but my dog's been down here the whole time. Let me see if I can get my dog up here. Ethel, come up here. Let's see if they can see you. Can they see you? Oh, you're just out of the screen. There you are. This is Ethel. This is Ethel. Oh, hi, Ethel. Say hi to the camera. Say hi to the camera. Good doggy, good doggy. Okay, I'll see you guys in the next one. Bye.